Hi guys, welcome back to my YouTube channel. So today I am going to be focusing on stocks and shares ISAs. Now I know I've had a lot of questions on this, generally from friends and family, because obviously we're in April now. I know this video is probably slightly late than I should have made it. I should have made it, of course, maybe 2 weeks ago or so. But anyway, I'm going to make it now so that you are prepared for the next coming financial year. And I'll try to answer some questions which I typically get a lot, and hopefully this helps you kind of understand stocks and ISA shares in a bit more detail. So the first question is, how does the annual allowance work? So you might be aware or you may not be aware, but however, every person here in the UK gets £20,000. What this means is it literally just means deposits. So as an example, let's say you invest, I don't know, let's say £20,000. If you invest that just right now, then that's it for the financial year. Let's say you invest £10,000 and then that £10,000 goes up to, let's say, I don't know, 50. So now you have 60,000 in your account. Does that mean you can't invest anymore? No, it's only focused on deposits. So you've only put 10,000, it means you can put another 10 and make it 20, regardless of how much your account actually grows over time or over whatever time period. So every year you have an allowance of £20,000. Okay, the second question is, I've kind of answered it already, but the second question is, do I pay tax on amounts over 20,000? So essentially, let's say you have already invested £20,000, and then maybe your account, let's say, grows over the next few months or whatever it is. Before the next financial year, let's say grows by, let's say, £50,000 or something, and then now you have £70,000 in your account. Do you pay tax on the 50? Well, no. This is slightly confusing for everyone, but basically, whatever your returns are, for example, dividends or anything that you will kind of have from your stocks and ISA shares, now you will not pay tax on those. The main thing that they look at is your deposits. So just focus on your deposits and don't worry about how much your account can grow. The third question is, when can you actually take out the money in your stocks and ISA shares account? Now, the answer is actually any time. Of course, it's your money, so you can do whatever you want with it. But there are a few caveats to kind of take into account. So, for example, let's say you have £10,000 that you have invested in. Let's say it's a new tax year. Let's say you've got £20,000 from your in your account from last year. It's a new year. You've got 20,000 allowance. Let's say you take out that 20,000, you put it into your bank account, and then you put it back into your account again. Now that actually eats up into your entire tax allowance for that year. So that means that you won't have any allowance for that year just for doing that. So those are some of the things to take into consideration as well. And I know some providers, they are quite flexible. So for example, they do allow you to kind of take the money out of your account and put it back in, and it wouldn't count towards your tax allowance, which means that it's still intact and you can still top up completely new money as well. So hopefully that wasn't confusing, but if you need to, you can always rewind or whatever. So that's something to take into consideration as well. And also generally it can take a few days, because obviously they are selling these stocks and shares on the market, on the financial market. So it can take a few days to settle the transaction in full, and then have that money on their account, and then withdraw it to your bank account as well. So typically it can take maybe from 3 to 4 days up to a week as well. It just depends on the provider. So that's something to take into consideration as well, which is another thing why you should only invest money that you don't really need. And you should have an emergency fund as well, which means that you won't actually be taking out money from your investment accounts. Another question is, do you have to file for assessment to the HMRC? Now the short answer is there is no obligation to do so. Some people might have to for specific reasons, but generally you don't really have to do that. So you just focus on topping up your allowance for the year, your 20,000 a year, as much as you can. If all of it, then fantastic. So focus on that, and typically when you sign up to any account or any account, they typically ask for your insurance number anyway, for your national insurance. So the government can see as well what you're doing there in a way as well. So the next question is, can you keep cash in your stocks and shares ISA account? Now the quick answer is yes, you can. So when you go to making a new account, or when you go to put in money for the first time, or any time actually for that matter, is the money actually goes onto the account. So as an example, let's say Vanguard, Then after that, then you have an opportunity to actually do something else with the money. So money goes into the platform, and then you can invest into different things as in how you wish. So you can keep money on the platform as cash if you wanted to within your ISA account and also allowance. So what that means is, let's say you just want to make use, let's say it's kind of like to the deadline or something, and you just want to the deadline of when the new tax year comes, which means you need to use up your last year's allowance. What you can do is, if you have a bunch of cash, you can just put it into stocks and action shares, max that out into the platform, so you have it as cash on there. And then you're not sure what you want to do with it, which is fine. Just keep it as cash on there, and it's already in. And then when the new tax year comes, your money is already in the platform, which it counts for last year. So you can actually decide what you want to do with the money at a later date, and you won't have any kind of penalties for that or anything else, because your money was already in the ISA platform or account. So yeah, you can actually do that if you wanted to as well. That's probably a good way to just put money into the platform. If you're not sure what to do with it, then obviously you can always take it out, or you can actually invest into other things within the platform as well. So the other question is, do you have to pay tax? And if so, how, and when, etc., etc., etc. So the answer is yes, and well, the answer is most likely going to be yes. So you do pay a tiny amount of tax. So for example, I'm going to use the example of the UK. So we have the UK. So when you hold any company that's listed on the London Stock Exchange, you actually pay 0.5% for having the privilege of owning that company stock. So that's something that you pay. Now, typically, you don't need to do anything with regarding any of this information, as in you do it automatically. So for example, I believe some platforms, so let's say you deposit money and buy, let's say a share. As you're buying, it's actually part of the transaction costs, so that 0.5%, so you don't even know about it, you don't even really feel it. It's just part of the platform. And again, there's something similar for the US. I'm not sure exactly what it's called, but again, it's for having the privilege of buying US listed companies. And again, there's a slight tiny percentage to that. Typically, with the US, it comes out from the dividends that the companies in the US are paying you. Now, before the dividends even reach you, those dividends will be taxed. I'm not sure what percentage before it even reaches your account. So again, you don't have to do any paperwork or worry about that. But it's a really, really minimum cost, to be honest. Okay, so another question which beginners usually ask is, do I have to open a new ISA account every single year? Now, the answer is no, you don't have to, and you shouldn't, and many platforms don't really even allow you to do so anyway. So I think the thinking behind this is that, so let's say you're new to this, you open your stocks and action, let's say with Vanguard, and you're like, oh, it's a new tax year, I need to find another provider that's going to allow me to deposit another 20,000. Well, you don't have to do that. The original account or platform that you signed up to, and you have, let's say you've maxed it out, you have 20,000 for the financial year. The next year you can add another 20, and so on and so forth as well, and you can keep that account for forever if you wish, or whatever it is, so you don't have to open a new account. And the last question is, can you have more than one stocks and ISA shares account? And the answer is yes. There is no law preventing you from opening multiple stocks and ISA shares account. In my personal opinion, it's not really necessary. However, if you do want to do it, it's technically possible. So, however, there are a few problems that come with it. So let's say you have an account with Nutmeg, and then you open another account, let's say with Vanguard, for instance. Now, if you deposit money in both of them in the same tax year, now you're going to be in trouble with HMRC, because they're going to consider one of them as not a stocks and ISA shares account, which means you might have to pay tax on that, and you're going to have to do a lot of paperwork and other things to get that sorted out. So I wouldn't recommend that. However, if you, whatever reason, you wanted to have two accounts, you could have one account, leave it, don't deposit it, don't do anything else, open another account and deposit into that one for that year. And again, if you want to open another account, then wait until the next year. So essentially you can do that for one tax year if you wish as well. But for me personally, it's not really necessary. So yeah guys, thanks for watching, and I'll see you on the next video. Please don't forget to like and subscribe. It really helps to grow this channel and getting out to more people.